Coming up on Market to Market. Wildfires blaze across the parched South as the drought intensifies. A new mix of a popular herbicide is given the green light. And we peel back the antibiotic-free label. Those stories and market analysis with Elaine Kub next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, November 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The return of the American consumer is boosting bottom lines heading into the holiday shopping season. Retail sales were up 0.8% in October, according to the Commerce Department. Combined with the last report, the two-month increase was the largest since the spring of 2014. Consumers paying more for energy helped drive the Consumer Price Index higher. The Labor Department's rate increased 0.4% last month, mostly on gasoline prices. Federal Reserve Chair Janet Yellen told a congressional committee this week an improving economy has strengthened the case for raising interest rates. The dollar rallied to a 13.5-year high on the news. However, looking at the Rural Main Street Index, the picture isn't as promising. The Creighton University snapshot reveals a rise this month, but not enough to break the 15th straight report below growth neutral, mostly as lower farm commodity prices hold back the region. Even the thermometer is on the rise. Federal meteorologists announced this week 2016 is on pace to be the hottest on record. The Southeast could use a little change of pace when it comes to the moisture department, as portions of Alabama, Georgia, and South Carolina have just reported the driest three-month period on record. John Torpy reports on how tinder dry conditions have sparked a major outbreak of fires.
U.S. Forest Service officials say firefighters are battling dozens of fast-moving wildfires spanning thousands of acres of parched southern forest land. The largest fires have already blazed across Georgia and North Carolina, while smaller outbreaks have been reported in Kentucky, South Carolina, and Tennessee. With temperatures up to 10 degrees above normal, farmers in the Southeast have only been able to watch as the severity of the drought has increased in Alabama and Mississippi over the last few months. And the dry conditions have started to expand their reach into West Virginia and parts of the Florida Panhandle.
Conditions are terrible. It's so dry.
Bringing the inferno under control has presented an unexpected set of challenges for firefighters accustomed to attacking blazes out west.
Typical fires usually lay down at night for a period of time. It might only be 1 or 2 hours, but it gives you a little bit of a time where it lays down and you can kind of reset your resources and get them repositioned, where this one just continues to spread.
Compounding the problem is an official forecast for La Nina, which could bring warmer, drier conditions to the already parched South. If it comes to pass, there's a 50% chance of the weather system sticking around through winter, potentially tightening the drought's grip even further. While it remains to be seen how things will play out, a southern drought has often been followed by extremely dry conditions across the grain belt. For Market to Market, I'm John Torpy.
As the Trump administration begins to take shape, the current party in power tries to get final policy in place. Last week, a major chemical slipped over to the approved category with little fanfare. Peter Tubbs reports.
Last week, a new formulation of the herbicide dicamba was approved by the Environmental Protection Agency for application on genetically modified varieties of soybeans and cotton. Dicamba, a broadleaf herbicide marketed under brand names Diablo, Oracle, and Vanquish, has been scrutinized in recent years for damage caused to crops in adjoining fields due to spray drift. The herbicide has been marketed as the mate to Monsanto's Roundup Ready 2 Xtend soybeans. Released in 2016, before the new formulation of herbicide was approved for use, officials suspect farmers illegally applied older dicamba formulations on Xtend beans. The resulting drift damaged thousands of acres. In Missouri alone, officials from the Show Me state received 125 complaints of crop damage due to dicamba drift, affecting various crop varieties on over 40,000 acres. The new herbicide option was welcomed by growers struggling with weed pressure due to chemical resistance. Multiple weed species have developed resistance to glyphosate after years of overuse as a silver bullet for weed problems. Growers in the southern United States have resorted to manual labor to remove trouble weeds and, in many cases, followed the work with burning their fields after harvest. Despite the recent approval of the new formula, some soybean farmers feel they are being forced into planting Roundup Ready 2 Xtend soybeans in 2017. They fear neighbors who plant Xtend will spray the cheaper, older, and still illegal formulations, risking yield loss on crops sensitive to dicamba. From Market to Market, I'm Peter Tubbs.
Free is a word in the food industry that's given a boost to several new products. First came fat-free, then gluten-free, and now antibiotic-free is in the consumer lexicon. Colleen Bradford-Krantz goes behind the label on how advertising is factoring into the food supply.
Recent advertising campaigns by some of the nation's largest poultry producers illustrate how central questions over antibiotic use have become in the pursuit of customer loyalty.
Purdue, we take some unexpected extra steps to raise healthy chickens with no antibiotics ever.
For example, thyme. It's part of our 100% veggie diet that we feed our chickens and helps support their immune system. And we don't need to add antibiotics to their diet.
I'm no marketing guru, but this guy is.
He's from Madison Avenue. He likes to say things like, raised without antibiotics.
That's a phrase he invented to make chickens sound safer. And it doesn't mean much because by federal law, all chickens must be clear of antibiotics before they leave the farm.
I got more. Mom approved. Caffeine free.
Clinical pharmacology professor Hans Kudsey, formerly with Iowa State University's Veterinary Diagnostic Laboratory and now with Kansas State University, worries that companies are sending conflicting messages as they struggle to address this complex issue with customers.
I'm concerned that increasingly this is becoming an area of product differentiation to the extent where it potentially could start a protein war, where poultry companies are trying to distinguish their product from say, swine production companies or beef production companies by making statements about their product being antibiotic-free. All meat is considered antibiotic-free based on the fact that producers observe these withhold periods and there's the testing at the time of harvest.
The most recent federal report shows that only 9 of more than 6,000 animals randomly tested at U.S. packing plants, about 0.2%, had higher than allowed levels of substances such as antibiotics. None were poultry. Yet, according to a National Chicken Council 2015 survey, 73% of Americans believe antibiotics are present in most chicken meat. For meat producers, this common misconception can clash with the old adage, the customer is always right. In an attempt to allay fears that antibiotic resistance in humans may increase if the same drugs are used too frequently in animals, the federal government will enact new rules in January 2017 prohibiting the use of so-called medically important antibiotics to promote growth. Despite the new regulations, veterinarians will still be able to approve the use of these drugs for sick animals. Producers may find themselves having to decide between treating sick animals and avoiding customer aversion to the word antibiotic.
I think the interesting thing is how we relate to animals in our home versus how we relate to animals in livestock production systems. I think most people, including our household, would consider our pet to be part of the family, and you wouldn't for a moment consider withholding antibiotics from a member of your family if the animal or your child requires an antibiotic.
Maryland-based Purdue Foods, the nation's #4 chicken producer, is advertising so-called NEA meat, or no antibiotics ever, following a gradual change in how bird health is managed.
The use of antibiotics in food animals has become pretty complicated. It's definitely a concern to consumers.
Simultaneously, Mississippi-based Sanderson Farms, the #3 producer, explains it will still use a class of antibiotics intended only for animals. New ads make the point that implying all antibiotics are bad is a misleading marketing gimmick.
And I will tell you, it's been a hard decision. It's been difficult. We feel like we're swimming upstream, to tell you the truth.
Sanderson Farms has carefully measured consumer reaction to the new ads rolled out in August 2016 and discovered about 65% wanted to learn more.
We've always believed, let's tell the customer the truth. Let's tell the consumer the truth. The truth will stand the test of time, and that's what we're doing with this issue too.
According to the National Chicken Council, the average chicken mortality rate at commercial broiler operations was 4.8% in 2015. NCC officials say that percentage has increased slightly over previous years, in part due to the effort to use fewer antibiotics. Sanderson said its 2015 mortality rate was 3.9%. Purdue said that information was confidential, but added that their rate is at or above the national average. Kansas State's Kudsey believes all livestock producers should be transparent about how many animals they start with and how many make it to market.
If we're going to have an environment where we operate different systems of productions, it's important that we are transparent about all aspects of those production systems rather than just cherry picking.
Sanderson Farms, whose contract farmers raise 10 million chickens a week, uses antibiotics in the hatcheries and animal-only medicine in feed, stopping in advance of the mandatory withdrawal period. Otherwise, the medically important antibiotics are only used to treat sick birds or flocks.
Our vets have all taken an oath to treat animals and to keep animals healthy. We have heard from other vets and other companies that they respect our position.
Purdue Foods has been working since 2002 to provide chicken houses where birds are separated so they can be advertised as no antibiotics ever.
Generally, once several chickens get sick within a house, they can easily make the rest of the chickens in the chicken house sick. So what we do is treat that house and take that house completely out of the No Antibiotics Ever program.
In 2008, Purdue stopped using antibiotics in feed for growth promotion and redesigned poultry buildings to reduce bacterial growth. By 2013, antibiotic use in the hatcheries was ended, and different vaccines were being used.
Over 3/4 now of our chickens are raised with no antibiotics ever.
The treated birds are sold under a different Purdue label.
It's a delicate balance between balancing the needs of the animals and ensuring that those needs are met, balancing the financial considerations and the needs of the producer in order to be able to make a living, and then also balancing the consumer expectation, making sure that from an ethical standpoint that those animals are raised in a way that they have a good life and that they don't suffer and that they're free of illness.
For Market to Market, I'm Colleen Bradford-Krantz.
Next, the Market to Market report.
The highest dollar in more than 13 years kept a lid on commodities this week, even as Mexico went on a buying spree ahead of a President Trump inauguration. For the week, March wheat gained 4 cents, and the nearby corn contract added a nickel. Soybeans spent the week trying to find buyers as demand picked up at week's end. The January contract improved 8 cents. December meal rallied by $4.80 per ton. In the softs, March cotton had a major turnaround, jumping higher by $3.29 per hundredweight. Over in the dairy parlor, December Class 3 milk futures gained 67 cents. The livestock sector moved mostly higher again this week as the February cattle contract added $2.55, January feeders gained $3.95, and the February lean hog contract dropped 18 cents. In the currency markets, the U.S. dollar index zoomed to levels not seen since 2003, surging higher by 223 basis points. Crude oil moved higher as OPEC leaders discussed a production reduction, rising $2.21 per barrel. Gold fell again this week, this time by $15.60 per ounce, and the Goldman Sachs Commodity Index gained 9 points to finish the week at $359.20. Here now to lend us her insight on these and other trends is one of our regular market analysts, Elaine Kub. Elaine, welcome back.
It is always a delight, Mike.
And we are glad you are here. We have a lot of people curious about the U.S. dollar. Last Tuesday, we saw President Trump get elected. Dollar had a tremendous sell-off that evening. Since then, we have bounced back like crazy. And Chad in Randalia, Iowa, wants to ask you, how significant is the dollar's move to 13-year highs on the ability of the commodity markets to move higher?
It's extremely significant and not in a good way, right? This is absolutely putting pressure on the grains and all other commodities. They're going to have a really hard time, going back to approaching their previous highs, or certainly probably not able to break through any new highs until this dollar thing quiets down. And that's the thing, is this dollar trade is very forward looking. It's looking forward to a December 14th announcement by Janet Yellen, potentially looking forward to activities by Congress or the president-elect in January. So we won't know, what's going to happen there for a while. So all of that is going to keep this, if it would ever be subject to a buy the rumor, sell the fact, that is not down the line until 4 weeks or more from now. So that's going to continue to put pressure on the grains for the near future.
But are we setting ourselves up for a situation in the dollar like we saw with the last rate hike this past summer, where the dollar rallied right up until the Fed said we're going to raise interest rates, and then it sold off pretty substantially in the weeks following? Yeah,
that's exactly what I think may happen, is that the expectation, announcement actually gets made, you can sell off, take your profits. Well, what I'm saying is we've got 4 weeks between now and that announcement. So I think that the grains are going to have a hard time making any new progress in that period of time.
All right. And the wheat market, of course, is one of the most susceptible to these moves in the dollar. Elaine Kub, we still held on. We're holding at about 4 cents up on the week. Where do we go from here?
I think we go nowhere. The chart is flatlining. It's going nowhere. And I think especially with this higher dollar, it's not going to go anywhere. So I think this is it for wheat.
Are we hearing basis begin to strengthen in any parts of Kansas, South Dakota, North Dakota?
No, you're still looking at a scenario where a very weak basis in the Kansas wheat market means that cash wheat and cash corn in Kansas is basically the same price.
Wow.
Yeah.
All the wheat acres that we had planted to winter wheat that really looked good. We've got this first winter storm rolling into the Midwest, seeing a little bit of price activity based on that. Is most of this wheat going to be grazed off, in your opinion?
I think the acreage of wheat is going to be down 20% or maybe more, depending on the weather, particularly if you look at all wheat acres and you're including acres in the southeast, where you guys had the coverage about the extreme and exceptional drought that's in the southeast. I think by the time 2017 numbers really get on the books, wheat acreage could be down significantly.
Okay, which is probably what the market is saying needs to happen.
That would help bring down some of the ample inventories of wheat, and not only here in this country, but in the world.
Globally. Looking at global supplies here in this corn market, we do have a lot, but we're still seeing some demand for this domestic corn crop. Where does corn move from here now that harvest is, for all intents and purposes, behind us?
Yeah, good stuff, demand, right? This is record usage projected by the USDA. And so one does wonder, if we weren't fighting against the dollar, if it wouldn't be trying to break back above 360 and make new progress. I think it might happen, but not until after December or January happen. I got to get through this time frame.
So in this time frame, if I've sold a lot of corn off the combine, do I want to be buying it back right now?
Oh, I guess I'm not that bullish. Not necessarily. But I think what we're seeing is that nobody's selling at this point. We are seeing basis quite strong already. When you're looking at the December bids are 20 under into your processor level bids. And we're seeing very tight, and the spreads are getting tighter, and they're quite tight, particularly in the cash spreads. They're very tight in like the March to May time frame, which I think is a reflection of the fact that Brazil, for instance, is still importing corn. Their shortage of corn down in South America is not going to be solved until April, May time frame. So there is a sweet spot in here that I think we could get some bullish news for corn. It's just not now.
All right, acre projections. Informa came out, said 88.6 million bean acres. Elaine Kub, are you in the massive bean acre increase for 2017 club?
Yeah, in light of the fact that I just said I think wheat acres might go down 20%, absolutely, I think soybeans would be the ones to take advantage of that.
All right, speaking of soybeans, we've got a question here from Paul in Iowa. Similar question. Paul wants to know, for those of us who sold beans off the combine, what are the price targets to re-own in July calls?
Again, I think that once we get past these next couple of months, there is the potential for soybeans to get back above the $10 level. Yeah, I think that we're not seeing large increases in the acreage being planted in South America. Brazil, maybe a slight increase, but not the increase that we've seen in previous years. And I think the Argentinian soybean acres are actually down.
Yeah.
So there is some reason to feel that the soybean supply and demand situation will continue to be somewhat favorable, or may get some favorable adjustments in 2017.
All right, given the fact we are going to be planting more beans, are you aggressively selling any 17 crop in here?
Not aggressively, but it's not a bad idea. If you could make money at it, we've certainly witnessed that it is possible to go back to the paradigm of having not profitable prices. So if you know that you can pencil out profit at these prices, it's not a bad idea.
All right. Let's take a look at this cotton market, Elaine Kub.
Interesting
Big
stuff.
move to the upside.
Yep.
How much of this is related to dryness or China? What's going on?
I tell you, this is a really neat one. I think it's artificial scarcity. What has happened is the Indian government has decided to take out their large denomination currency bills. And so the traders and the merchants in India, the agriculture sector is suffering because they really can't buy the stuff. They don't have the bills to buy the stuff.
Because they took out the 500 and the 1,000 rupee notes?
Yeah, which is equivalent to the 14 US dollars, I think. So they're not huge $100 bills, but nevertheless, in that agriculture sector where they're making small purchases from small farmers, they're struggling to get the actual business done. So this is a short-term sort of artificial scarcity argument. The cotton is there. Globally, the supply is still pervasive. So I think it may be an opportunity to be selling. Maybe not immediately, maybe let this play out a little bit more, but I think this is an artificial rally.
And we are right back to the top side of that range we put in after that spike to the high 2-3 months ago.
So this, like I said, could be an opportunity for folks.
Okay. Let's look at livestock, Elaine Kub. The question that everybody is asking out in feedlot country, we have a couple weeks now of positive cash cattle trade.
Yeah.
We've seen this market trend higher. Cattle on feed report came out Friday. Number of cattle on feed, 99% of a year ago.
Yep.
Is the low for this cycle in?
I'm going to say yes. I'm going to say we can put that behind us.
All right.
We'll shut the door on that.
99, 98 and change is the low.
Hopefully, yes.
Okay.
Fingers crossed, right? But I think that cattle on feed report will receive somewhat of a bullish interpretation. There were some pre-report estimates that this isn't going to surprise everybody, but it will receive a bullish interpretation, and it will help to sustain this little recovery that we've had. Absolutely, and it has been cash led, as you mentioned. We had $4 to $5 higher, $7 to $8 higher in the dress trade. So it was cash led. It was in the middle of the week. The Packers really wanted those animals. So this is a real recovery or a real rally, and I think we can put that low behind us.
Do you have some concerns that maybe this was just buy up ahead of a shortened holiday week this next week?
No, I think these prices will be maintained next week. I don't think that we're going to shoot back to nobody's smiling too much yet,
right.
But I think that we're going to maintain these prices.
Well, we say nobody's smiling too much
Except the
yet.
Packers.
Well, the Packers have been smiling all summer.
Yeah.
But the cattle, the feeder buyer seems to be willing to open their pocketbook a little bit more and be a little bit more aggressive. These feeder values have been climbing. Corn's cheap. Fats are rising in value. How much more room can we move to the upside on feeder calves?
I think if anything's going to get a bullish interpretation of that cattle on feed report, it was the placements. That was the really bullish surprise there. That was down 5% from a year ago levels. And it was even the heavier ones, 800 pounds, and they were down also. So that, again, some people expected going into it because not only did nobody want to sell at October prices, but coincidentally there was great weather. There you can put them out on stocks. So it's a bullish interpretation for now, but it's just pushing that problem into next summer where you're going to get the bearishness because those animals are still there. They're just not in the feedlots yet.
Okay.
So yeah, I think that in the short term, you're right. They're going to open up their pocketbooks, maybe be able to push these prices a little better. But I think we should be worried about July kind of numbers.
So on this pop, how do you want to be selling out through next summer, get some protection in place?
I think, it's really hard to say that at the prices that they are. These 120 prices, again, that doesn't get anybody real excited. But if you saw a rally, if you saw something pop, I would be very worried that it would not be sustained between here and then. So yeah, I think you should be ready to get some coverage on. Maybe not now, but sometime before the summer.
Okay, put another $5, $10 on this market and take advantage of it.
Yes.
Lean hogs, Elaine Kub. We have been seeing an exceptional slaughter pace of this lean hog market. Prices have been in here relatively stable. Where do we go once we get through Thanksgiving season?
stable and cheap and will, able to spur demand not only here but internationally. So we can say that about these prices, that they're cheap. And you look at the contracts going, the deferred contracts going out, and there is some expectation to see a $60 level or $70 level again sometime in 2017. But I don't know that we're ever going to get there, because you talk about the slaughter pace. This is all they can do. 2.45 million head a week. That's literally about as much as they can possibly do. So how can you expect the packers to be motivated to pay more than the current prices? I think there's very limited reason to get bullish when there's just not the capacity to slaughter any more hogs.
And the capacity, we do have several new plants under construction.
But they're not there yet.
They're still 18, 24 months out, as close as I was aware. Okay, so it might be kind of a struggle to get through this slug of hogs.
I think so. I think we should be happy with what we have, I guess.
All right. Crude oil. We had OPEC meeting. We've got them always talking about reducing production, coming together, reducing production. Elaine Kub, will they ever, as a cartel, be as effective as they were in the 1970s?
They'll never be as effective, because they can say that. At the same time, we're seeing headlines that the largest ever continuous oil discovery in the United States, that was announced this week in the Permian Basin. So, this is just, it adds to the decreasing significance of OPEC.
So where does crude go from here? Are we in a 35 to 50 range into the future?
I think that's exactly the takeaway from our domestic stocks, and not just domestically, but globally. I think the supply scenario and the storage scenario of oil means that, this is a long-term story, fortunately, for our pocketbooks.
All right. Well, Elaine Kub, thank you so much for taking the time to join us.
It was a pleasure.
That wraps up the broadcast portion of Market to Market, but Elaine and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. Now, this week on the M2M podcast, we discuss dealing with memory issues in rural America. Search for MTOM wherever you find podcasts. And join us again next week when we see how old iron has created a family-friendly rivalry. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.